Good morning. Welcome everyone to the FX Trading Festival of webinars. This is Elite Currency, and Nenad and Chris are here with the sixth trading room, in fact, our last one. And that's a bit sad, but what can we do? It was a special 2 weeks to show HARP and the HARP method and how you can use the method to tackle Forex trading. So we have a great session lined up for you today. We're going to take a look intensively at the templates and what advantages it offers to you as a trader and to us as traders. Before we do that, though, maybe just a small introduction of ourselves in case that you're maybe not aware of our work. We do some webinars at Idle Markets, for instance. We have some analysis on Forex Factory and FX Street. And of course, at Idle Markets, you can find a lot of content that we publish as well. So if you're curious about that, you can do that at admiralmarkets.com. Before we dive into the topic, though, be aware that trading for exchange and other financial markets is considered high risk and may not be suitable for everyone. Therefore, please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. And by continuing watching this webinar, you agree with this disclaimer. And you're also aware of the risk involved when trading. Alrighty, so sorry first of all about yesterday. Actually, I wanted to stop my screen sharing, and then all of a sudden I clicked on stop the whole webinar button. I couldn't get it back, so Nenad was not able to show his euro yen trade there, and it's something we're definitely going to do, definitely in this webinar. So sorry for that. In that regard, good morning, Nenad. How are you doing?
Good morning, Chris. I'm doing pretty much fine. And as we can see, price is moving a little bit slow now, but actually we are waiting for a price to turn on its full potential. Yes. Okay.
Already, okay, Nenad is talking. I don't hear you.
Okay, is it better now?
All right, sorry about that. Somehow I'm not hearing Nenad, so it's difficult for me to understand, if he was saying something or not. But let me change the settings. Maybe it's the microphone. Yes, it is. Sorry about that. All right, now I should be able to hear. Let's test.
Okay.
Yeah, I hear you now.
Great. Yeah, don't worry. I thought this was my microphone. Well, it's always when we deal with technical tools. So excellent. I'm feeling really good, and as I said, I really want to see some price movement. Yesterday we had a nice trade on euro yen, and I was trying to show you, but unfortunately we clicked the wrong button, and well, basically we are traders. We are not we don't have so big experience in these kind of things, so I expect really that you forgive our little mistakes. And basically we had a great trade on euro yen. Price fell down later for some 50 pips, and even though we made an entry prior to basically a big news, prior to ADP, we had a nice going on, even on dollar yen. If you remember, Camarilla MACD setup on dollar yen, it went 60 pips in our favor after even good news announcement from ADP. So let's see what tomorrow will bring us. Tomorrow is special day because we will have NFP, but at this point we can try to search for some different setups. I'm in on Australian dollar. I'm in on Australian dollar currently. Chris will show you his screen now and explain why we are bullish, and then I will show you my live account trade on HARP swing for Australian dollar.
Yes, exactly. We're actually looking at the analysis template, the HARP analysis template, folks, and that we just do. If there's any doubt about the trend, you can quickly see what's going on this template. That's the beauty of this template. It's really
just to grasp what's going on in a quick overview. And it's pretty easy. It's pretty straightforward, in fact. When we see in the right lower corner here, green buttons, it says buy only, it's an uptrend, which is confirmed by the slope of the color as well of the indicator here, and also by the Heikin Ashi candles that are aligned with the moving averages. So yeah, everything is bullish on this odd USD, and there's no doubt about that at this moment, at least from this perspective, this time frame at least, there's no doubt about that. And we can use those pivot points, very accurate pivot points, to see how far can this still push. Is there enough space for us to see a move up to R1, up to R2, M4, which is typical what one could expect. Sometimes it happens, even of course it goes even further. All right, so we can see and judge a bit how far the movement has already gone that day, and that's the value of this analysis template. If we start looking at, let's say, the euro dollar, you can see that this was a downtrend, but now is in a ranging mode, or it's at least, let me say it this way, correcting. So euro dollar, from a trend perspective, is not interesting. Pound USD was in a downtrend, all right, but you can see it's a pretty choppy one, and indeed the indicator is showing range, and Heikin Ashi is blue, but going against the moving average. So it's a correction. It's that simple. So from that point of view, if we're really looking for sweet, nice trending setups, and not looking for scalping trades, which of course you could, in fact, go both ways, the euro dollar and the pound dollar is out of scope. And the Aussie is good. So we can keep an eye on the Aussie. Aussie dollar is on our vision. Dollar yen is out, right? This is a range at this moment. Kiwi is in the trend. Dollar CAD is in the Kiwi is an uptrend, by the way. Dollar CAD is a clear downtrend. Red Heikin Ashi candles, we got a strong indicator sell as well. Euro yen, range at the moment. Pound yen, range. And then we got some crosses like the euro odd, pound odd, euro New Zealand, and pound New Zealand, and they are trending. Yes, they are also trending. Euro odd is trending down, pound odd is trending down, euro New Zealand and pound New Zealand too. So those seem to be, it seems to be the Aussie and the Kiwi, right, that they appear often against the euro dollar and pound kind of group, right? So it's kind of euro and the dollar and the pound weakness versus the Aussie and the New Zealand strength when looking at the 1 hour time frame at this moment. That's kind of, we can make a summary. And really, I mean, we have a whole hour of trading room, but it's not needed. As you can see, you can do it a lot faster, and you can monitor it pretty fast as well. And therefore, we think very efficient in trading terms, even for people that not necessarily trading full time, but maybe trading part time. You can keep an eye on this. Very simple, very easy. Even if you're working, it doesn't require much time, as you can see. So that's it, really. I have nothing to add. I mean, obviously, you can look at higher time frames to see where support or resistance. You can add things and look for patterns. And we're going to have a webinar at Admiral Markets on patterns today. In fact, you can add all these things. That's great. I mean, you can do more work if you want to, if you have the time, if you like it. It's possible, but it's not something that's necessarily required. You can just filter out already the market like this, and you can continue. You can do more pairs if you want. I'm just looking at the majors and the major crosses. You could go across the board and see, which one do you like the most. So that's kind of the scope that leaves a bit of a freedom to the trader and the individual. But okay, with that said, let's take a look at the swing, I guess. Swing template. As it's loading. Now maybe, or Neda, you want to show maybe that trade first of all? It'll take a few seconds.
Sure. Yeah, I will show it. It's a good time to show it now, as exactly we are having some profits at this point. So you can see I'm always very, very strict about money management, and especially we want to show you how to trade on live accounts. So those things, of course, will be covered in our course, during our course. So we want you to start directly on a live account, not demo account. You can see I made an entry something like 70.60, and it's actually very low spread. Admiral Markets ECN account, very low spreads, 0.1 pip spread, very low commissions, and exactly we are at 76 profit at this point. So 17 pips of profit. I'm still looking basically to see where Australian dollar will head, but my opinion that Australian dollar will indeed go to touch R1, which is 70.89, and that will be maybe a good spot to scale out of position, or to, well, basically what I'm trying to suggest. There are some couple of money management rules we always apply. If we go with let's say at least 0.20, we can scale out. But now, because I opened 0.30 lots, I would definitely go with possibly putting a trade to break even once it hits this region. Now, if it breaks it, then there are also our rule, which is saying if R1 is broken, there is 75% approximately at this point. Our latest analysis suggests a 75% or chance that it will proceed to M4 and R2. So I'm waiting to see whether the price will hit the level and the reaction at that level. At that time, we will be deciding about whether to, let's say, scale out, put our stop to break even, or take whole profit. It will depend on several factors. So at this point, we are some 17 to 18K price in profit. So actually, that was it. Chris, you can continue with GBP New Zealand. I will continue to monitor this update, and I will show later. I will also scan some interesting pairs, and you will see what will be our trade for the day.
Great stuff. Let me share my screen again. All right, this is by coincidence the pound yen. It's actually not one that was on our trending list when we were looking at the analysis, right? So, but in any case, it's showing always some value in the sense that even the entries template, we have two of them. We have the swing template for a bit longer term trades, and we have the scalping template for entries for shorter term trades. This is the swing template, and even just looking at the swing template already provides opportunities to make judgments about analysis and whether a trade is good. That's why we were focusing on Tuesday and Wednesday on this template only. For those traders that have a bit more experience, they could really stick to this instead if they wanted to, and save even more time, in fact. So that's an option. When we look at this, you can see a couple of things going on here. This is the pound yen. Of course, the fact that yesterday was a great trade on the pound yen to the upside. Really enjoyed that. I actually exited here. I was hoping for one more push up. That had to do with a different type of analysis on Elliott Wave. As you know, I like Elliott Wave. Well, that didn't happen, so I got out for less profit than maybe others did. But that's okay. It moved down a lot. And you can see how the bands here are working nicely. And we're now at the top part of the band. So, it could be perhaps a more aggressive attempt to go short, but there's no trend here. So definitely something that is not fully aligned with all the aspects of a trend. We have bearish momentum and could be at a resistance spot. But if we focus on the ones that had a trend, let's do that right now. And well, now that I already showed the Aussie, that trade, as you can see, is already on its way. So maybe better to focus on something else. Perhaps the Euro odd was on our list. Remember when we looked at our list, we had Euro odd was one of those, just like the Kiwi and the Aussie and Euro New Zealand and Pound New Zealand and Pound odd. So when I look at what is the range bar, ideal range bar setting, it's 25 pips. So I just changed the number here and then indicate that I want this range bar. Once I have the range bar template or the chart right in front of me, I will use our swing template. All right, so this is the Euro odd. So We know that from the analysis template, we're in a downtrend. We can see from the swing template that we're in a downtrend. Why? Because look at the channel. It's pointed to the downside, right? So it's pretty simple, pretty straightforward. The angle is going from high to low. If you look on the left chart, the channel is higher than now. So obviously, there's a downward slope. Very simple. If you look at the HARP MACD, especially designed MACD for our HARP, we see a downtrend too. If we look at CCI, there could be a bit of divergence here because this one is stronger than this one here. So that could be the only worry, in fact, when looking at this particular setup. The requirement that we would have for a setup, an entry, is that within that trend, we make a pullback, similar to something like this, for instance. Right here, right there where I have the cursor. That's a pullback that probably at that time would have brought the price back also to the top of that channel. Now, the channel could be a slightly different angle at that point in time. The point is that it would have been probably in that top zone. So what we're looking for always is A, a trending environment, B, a pullback within the trend. So if we're in a downtrend, we're looking for a pullback to the upside. If we're in an uptrend, we're looking for a pullback to the downside. And then the first sign of a continuation. So maybe best if I grab my drawing tool, 1 second. Let me do that right now because I want to show that motion, and it's not so handy. I don't have it open, the drawing tool at the moment. And I'll be able to make some nice lines on the chart. All right, that's it. So what I mean, I think you know what I mean, but I just want to be very clear that let's say it's an uptrend. We're looking for a pullback to the buffer zone and then a continuation. So what is the buffer zone, first of all? Well, the trend we've talked about, that should be clear. So what is that pullback? How do we define the pullback? We're looking for price to get back to this part is the upper buffer zone. This is the lower buffer zone. So in an uptrend, we're looking for price to get back to the lower buffer zone. In a downtrend, we're looking for price to get back to the upper buffer zone. That's what we qualify. That's what we characterize as, or explain it to ourselves, how to define basically the pullback. The next and third part is the continuation, the entry and the follow through of that trend. So in an uptrend, we get the pullback, and we're looking for the first range bar that is again blue, as an indication that the pullback is over, and we might get the follow through. In a downtrend, well, we have examples already on the chart, in fact, right? We're looking for, this is the downtrend, this is that pullback, and we're looking for a candle that is showing red and a strong close, right? These are dojis here. Well, first of all, this one probably didn't hit the band, but if it did, it's a doji. The second is a doji. We're looking for a candle, a range candle, that has a close with a decent proximity or closeness to the low or high. So those are right here are good examples of range bars that show that continuation. So those are good setups there, and we get the follow through indeed after that. So that in any case is the signal of continuation. So we got the trend, we got the pullback, and we got the continuation. That's what we're looking for. So what are we looking for now? The answer is simple. The same thing. Very simple. Only thing is that we don't have it now. Why? Because price is not in that zone as we speak. So it has to go up to 158-ish, 158.60 to make that turn in. There's that potential setup on the euro odd. Now, because of the slight divergence there on the CCI, I would be careful with the TP and probably use a trail stop. This is something that we'll dive into with the advanced materials, how to approach that. But I think that the setup in general is clear. This is, I hope, well, if not, you can always write us an email. But that's what we're looking for with this system. And with range bars, it's so pleasant to trade with because of the fact that we're actually looking at pure price action and not anything regarding time. Because if we would be looking at time, we would see all kind of price stuff here, and it would cluster and it kind of almost make us see things that we shouldn't see in a way, if you know what I mean, especially with so much sideways noise. When we focus only on price, we know that our area of retracement, we know what we have to see before we expect to follow through. That's it. So can we take a setup now here? I wish I could and show it to you live, but we stick to our rules, and the rules say that I need to wait for the pullback first and then the follow through. So will we sometimes not get a setup in our live room? Yeah, because we need these conditions to meet. These conditions do happen regularly, in my and Nenet's opinion. More than enough, I think, for most of us traders to be to find enough opportunities. But it doesn't have to be right now, right here, right at this point. So that's just the euro odd at this moment. We can take a look. I don't know. We can take a look at the others, right? Which was how about the pound New Zealand? Let's switch it a bit because we're looking at the euro odd. So let's take a look at the pound New Zealand, which oddly enough, strange. I cannot see it. Okay, let's take a look at the pound odd. I don't want to waste too much time on finding it. So anyhow, I opened the pound odd. So what we have to do to get the analysis template going is dive into the 1 minute chart. And I need to find out what is the ideal range setting, which is a simple indicator I add. Right, and of course I'm showing you from the scratch, but typically you would have this part of it already ready. And you can see that the range for the pound odd is 28. You know, these pairs do have, these crosses do tend to have higher range settings, and that's not very untypical for these. So once I have now the 28 range bars chart, I can set up the template. That's it. So the only thing, basically, it's a very simple. I go to the 1 minute chart, see what the range setting is, and then choose that range bar setting. So this is the pound odd, and we're looking for a sell. Remember, because this is a downtrend. And what is therefore at this moment the preferred option? Well, obviously, if you want to trade with the trend, we're looking for shorts, right? So in this downtrend, you can see also the channel indicating, confirming the trend to the downside very clearly. Plus, we have also the confirmation of the Harp MACD downside. It is a bit of a choppy downside though. And that's something that the Harp MACD shows too. You see the red, blue, and green line? They're kind of flat. So the average, okay, we do have some downswings, but the average, right, of those downswings has a bit of a choppiness in it because the average is a bit flattish. Okay, but anyhow, overall, there's no serious divergence as far as I can see. No, there is none at all. Actually, looking at the CCI. So from that point of view, I don't see enough reason. I think it's good. The downtrend is in play. We see good potential. So we need a pullback. Where? To our buffer zone. Where's the buffer zone between this red line and this outer line? Price gets there and turns around. That would be the short setup for a Harp swing. If we are looking for a stop loss in TP, what we would do is as soon as we get the turnaround, we go with the stop loss above the top. We go, or the bottom for an uptrend. We go with the TP. We can look at the pivot points on the analysis template, see what level is available for us. What is the next kind of major pivot point there that hasn't been hit yet? Or we could even aim for one that has already been hit, depending on how much space there is. So that's what we're waiting for the pound odd. So now it's all a question of just keeping an eye on the charts and seeing if the setup happens. Now with the scalping template, there's also audible alert and a visual alert as well, because there you have to really be fast and monitor. I mean, you have to be really on top of things, of course, because of scalping, everything goes faster. All right, so this is basically the process that is valid for HARP and can be adjusted depending on your experience levels as well. And you could expand with the scalping template. You could drop the analysis template. You could look at 1, 2, 25 pairs, depending really on your psychology, on your time, etc. So those are some flexibilities, which is good because then you can adjust the method to your view, to how you see the market and how you want to trade. So I think that you want to you had something in mind to show. I think you said.
Yes, I will show you now our setup Camarilla MACD for dollar Swissy, and I will also show you I have basically exited Australian dollar because I entered another one. So Australian dollar was good for 20 pips of profit, although it has a potential to go more to the upside. But because I said there was a resistance there, I was really, now we need to manage our trades properly, of course, always depending on the account size. So that is why I'm working with a smaller account. But the thing is, I need to show you how you can effectively build your account with a HARP swing. So the main reason why I exited the Australian dollar for 20 pips of profit was, first of all, we had, as I said, there was a very good rejection here around this R1. Exactly, price came to 70.85, R1 is 70.89, and it's a little bit hesitant to go to the upside. Now, if we have the rule that we, let's say, take only one trade, because we need to manage the risk, we need to know the proper risk size according to account balance, according to our ROI, return of investment. What do we expect from the account? Is it a building account? Is it investment account? Is it long-term account? Everything needs to have a plan. The plan for this kind of trading, for this account, is to be built. So we want to build the account to its proper size before we can do, let's say, longer term trades with bigger stop losses and whatever. So for that kind of trading and for building up the account for everyday trading, HARP is an excellent tool. So I closed at 70.80. Although if I stayed in this trade, I would really wanted to see a rejection exactly here. If it breaks, then I would probably put my stop loss to break even, expecting that there is 75% of chance. That was our latest analysis with AccuPivot points. 75% of chance when R1 is broken to reach 71.02 and later proceed to R2. Same with this one, 75% of chance if S1 is reached that it will proceed to M1, and if it's broken that it will proceed to S2. So those are primary reasons. Okay, another reason is basically I have taken the trade GBP dollar at 51.49. So GBP dollar for 51.49 is currently running. So we will see where it will go, but definitely I want to see, because you see this was not I can say 100%, there is not always 100%, but let's say 90% trend trade. Yes, the trend is to the downside. We can also check it wherever we want. But the thing is, HARP MACD is now showing an upward slope. So I will be careful with this trade if it reaches 51.28. I would like to see a rejection around this level and to see if this level will be broken. If this level is broken, probably our hard MACD will turn to the downside, reflecting that the price will continue to lower buffer zone while still in downtrend. But if it fails to reach this level and slope becomes more inclined to the upside, I will review the trade. But currently, this is a short at 51.49 after 20 pips of profit on Australian dollar. Also, let's see what our analysis template is suggesting. It's suggesting that basically this is a pivot point. This CMA is above this CMA, so this is now a pullback in short trend, big short trend. Also, by looking at 4-hour time frame, we can see that the price is indeed in a big downtrend. This is our crucial level, guys. So basically, look at this, it's not very far from it, and this level has been broken. Okay, it's been broken. So I expect really the price to go more to the downside. We will see. So 1 hour is saying that the price is now, it says ranging, but because it's neutral, you go with the trend. So it's not a strong trend. This is retracement in trend. That is why it says ranging. So this is good time now to, of course, short into it according to our HARP sweep. And exactly, you can see I shorted the pair 51.49. So we are waiting now for the price to reach. I would like to see a reaction around this spot to see whether hard MACD will turn to the downside. So I want to see there first to review the trade. As you can see, we are doing this a live account. That is what we want you to do. Really, we don't want you to demonstrate this because after our course, you will be ready to trade it on live account. So no demo trading for this one. We are very strict with money management rules, very strict with targets, very strict with taking trades, entries. So nothing should be taken randomly. Okay, you need to follow the set of rules. You need to have a plan for trading. This is what we are teaching you, to have a plan always and forever. Okay, because you're a businessman, right? You're a trader. You want to take this as every other job. Even this is more serious job than other jobs because you're doing it for yourself, for your family, and it's your money you're dealing with, not company's money, not your firm's money. It's your own money. It's your own financial independence, right? Even though if you are employed in a company and you still want to trade, we covered everything, guys. We covered everything for you. So this is a potential trade on 4-hour time frame. If you want to take on our Camarilla MACD, I will show you now here. So Camarilla MACD setup for dollar Swissy is to go long, of course, but we want to see a bit of pullback. So mark this level, and if you want to take dollar Swissy long, I would show you where to take a potential long trade. This can happen during today, tomorrow, maybe tomorrow because NFP, but I see that there is a good confluence here around 88.6 is 96.85. So basically somewhere around this region. Okay, this is the region. Okay, this is our buffer zone. We want to take this double bottom, which is support, and we want to take this 88.6 and the bottom of this week. So basically, as I'm explaining also on my price action webinars on agro markets, defining support and resistance is very important. That is what we teach you always. Support and resistance is not the level, it's the zone. Okay, so this is the zone. This is a double bottom here, and this is a previous week with 88.6 confluence. So this is a support zone. Okay, do not treat supports and resistance as levels, treat it as zones. That is why you need to have a little bit more deeper understanding about price action. So this is your swing trading with Camarilla MACD. This is your entry zone as soon as the price enters here in between 96.75 and 96.85. plus minus, let's say 2 or 3 pips approximately here or there. So you can enter within this zone and put a stop loss of exactly, I would go with round number this time, because I think that round number is very, very important for Swissy. And I would definitely go with 96.00 stop loss, including the spread. So that would be definitely my stop loss if I enter this trade. And I would target 98.50 for the first time. So 98.50 would be the first target. If we get a 4-hour close, now pay attention. If we don't get a pullback to our POC here, we can make a long trade here. If we have 4-hour close, then we need above H3, because this is X cross. You see, there is this is not an inner trend line, but this is indeed a trend line which is showing you resistance at the price. This trend line is crossing H3 pivot, so this is exactly X cross. So if the price closes above H3 here at this point, if the price closes here, 4-hour close, then you need to zoom in 1-hour time frame to see breakout retest or breakout pullback continuation. If that happens, we will aim dollar Swissy to this level, 99.00. Okay, so this is our final target for this trade. This is trend trade. Enter long here, put your stop loss here, and you need to target 98.50 for the first time. If the price breaks out, that can be a continuation of your trend trade and a separate breakout trade. 4-hour close above H3, zoom into 1 hour, watch for breakout retest or breakout pullback continuation pattern, targeting 99.00. Okay, so that is a trade which we are giving you. We want to see if the price will pull back or make a breakout of H3 X cross confluence. Okay, if you're not familiar with X cross concepts, that is also what we teach. You will learn everything on our Camarilla MACD, of course, course. So pay attention to this. The most important thing is to pay attention to this. And of course, manage your trade accordingly. Do not be greedy and take trades which are more than 1% of risk. We are teaching you to trade properly as a professional. Okay. So do not take trades which are more than 1% of a risk, because you want to save your account from unexpected things. Okay, I know it's very tempting to make a 10%, 5% risk, but please, we are professionals. Do it as a professional. Do it as big banks do. I always say, a good friend of mine worked in Credit Suisse Bank, and he was really he had contacts with traders there, and that is confidential info. I cannot share it, but one thing I can share is we teach you to trade like big banks, okay? Like big banks. We are not teaching you to trade like 90% of retail traders do, okay? Telling you risk 2% on each trade, risk 3%, do only 30 pips stop loss. You don't know if this trade will be 30, 20 or 100 pips stop loss, but you know what is your risk. Your risk is always the same, fixed. Your income is not fixed. Your risk is fixed. Think about it. Chris, you may continue.
Yeah, very good stuff there. Very important, absolutely, without any doubt. And the pound dollar kind of resembling, by the way, the pound yen I was also looking at. And yeah, good points, very good points. I think that the last thing I want to actually tell you, I think from our perspective, everything has been explained, but I do want to share one thing with you. Let me see if there are any questions as well. Let me refresh the email, see if anyone wrote a question there. Let's see. No, not at the moment. That's no problem. We wanted to tell you that if you are interested in joining HARP and using the HARP method, for your trading, then we do have a special opportunity to do so. In fact, until October the 5th at 1 a.m. Eastern, that will be stopping because we have this deadline, because we want to start with a nice group of traders and we don't want to have one trader starting today, then the next trader starting on Monday, and then one more the week after, and then one more 2 weeks after, or whatever the number could be. That just isn't efficient for you and for us, and doesn't make sense. So that's why we have that deadline. And also we have a limitation of number of traders, because we do want to offer the best of what we can give. And if there are too many traders starting, well, that could become a bit difficult to really offer the best quality. And that's why we have a limitation in number of traders as well. So that is the reason why. Now, we have a special price because this is actually the first time we're doing something like this. This is the first time we're offering the HARP method ever. And I don't know if we'll ever do that again. I really have no clue. I mean, this is the first time we're doing it. No idea what the future will bring. But for the next few days, we do offer it at a lower price than we were thinking of, because we wanted to make it accessible for you. And we realize that still it's not for everyone, but we do hope that it's not necessarily a burden anymore that big. We had originally actually 2,000, almost 2,000 for HARP method, and we brought it down to 1,290 instead. So if you're interested in HARP method, you can get it for 1,290. If you want the full package, which is a lot more bonuses included, then you have the option with the entire HARP package. So if you're interested in the entire HARP package, you can click on this button. If you're only interested in a HARP method, plus, by the way, the templates, indicators, and live room, a live explanation, and access to Skype group that comes along with it, then you can buy that here. And in case that went a bit fast, here you can get more information. No, that's the wrong, this one. Sorry about that. I'll explain what is included in that HARP method. Once again, it is HARP system, the instruction webinars and the video recordings. It's the HARP indicators. It's the HARP templates, 3 of them, trend, entry, and the swing, or trend, scalping, and swing. It's the HARP arrows and signals. Right, so that's great stuff there. We offer as a bonus the live trading room, 8 sessions, so that you have not only a theoretical point of view, but also the practical point of view. The access to Skype group, very important to be in the community, and some ebooks as well. So that's the entire package for 1,290. So, all right, that's just wanted to explain that. We also have some bonus webinars, by the way, tomorrow, Friday, Saturday, Sunday. If you're interested, that would be answering questions about HARP, anything you would like to ask, and you're wondering, what is basically, this or that, anything you want to discuss, by all means, send those questions and we'll discuss them, all right? It will be available here, the same link as you're watching now. And you can watch tomorrow, and the times are going to be tomorrow at 1 p.m. UK time, Saturday 1 p.m. again, and 4 p.m., and Sunday 2 p.m. So we got a lot of bonus webinars, and you can watch the live or recording of any of these. And if you do send a question, all right, then send it. Let me know which recording or which webinar you would like to see, because then I can help with telling you, then I can know which one you're going to watch. That's what I wanted to say. All right, so, and the email address for any of your questions, and we will answer all of the questions that are important to you regarding HARP, because maybe we forgot something that you think is important. info@elitecurrency.com, right here. Right there. So that's about it, I guess.
Okay, and now I would just like to share my screen about pound dollar trade. So pound dollar currently it's some 19 pips, 14 pips.
Oh, sorry, I don't think I was presenting. Did you see the screen?
Yeah, everything was fine.
Oh, okay, good.
Indeed, everything was fine. So 14 pips of profit now currently on the pound, as you could have seen live here on our webinar. 20 pips of profit on Australian dollar, currently 14 pips of profit on pound dollar. I will manage this trade accordingly. So you can see 30, 35 pips during this webinar, harp swing only. So you will always get great setups. Yes, this was actually a long trade from yesterday, which went in a good profit here. So everything is shown on the chart. Okay, no nonsense, no philosophy, no blah blah. This is clear. Okay, guys, I think we are ready to conclude the webinar. Send your questions, send your whatever you want to ask us about this. We are very clear. We will answer everything. So do not hesitate to contact us. Okay. Thank you for watching. Okay. Thank you for your comments. We always appreciate it, and we will be here with you soon, guys. Cheers, and as always, trade safe.
Good trading, folks. Talk to you soon. Cheers.